But you could give Romania as the same example. 12 months ago, Romania was in the middle of a big political crisis. The EU and the US government were getting involved because they thought Romania was going to go in the same direction as Hungary. It was completely untrue. The reporting was completely misleading. The Prime Minister was re-elected with a huge majority, and now we've seen Romania as the fastest accelerating EU economy that there is, and while it's growing at the same rate as Poland, it will accelerate beyond that, probably averaging about 4% over the next 5 to 10 years, which is what you'd expect because there's deep capacity in that economy. The same crisis is happening in Bulgaria at the moment, and yet you would see, I should imagine, in another 12 months, Bulgaria will be performing the same as Romania is today. Just as there is very little real estate legacy, there is very little history in terms of either the financial legacy as there is in Western Europe and the US, and there's also very little political legacy. So these immature markets are able to move forward very quickly and sort of shake off the past. And I think Hungary is a classic example of that, where the market just completely misprices the risk there, and those people that can buy good assets, I think, will be very well placed, quite frankly.
And what's your time horizon for these? Are you looking at it over 10 years or?
No, we're similar to Daniel's business. You know, we would invest with probably a 3 to 4 year business plan at most. You know, that's the way our money works, although we're at slightly different parts of the risk profile, our timeline is very similar.
And therefore, in those kinds of areas, obviously one of the concerns that Daniel has coming from his investors, presumably, is how can you be certain of an exit? So how do you see that for the areas that you're invested in?
Well, for us, we do development, and so the only thing we're doing in Romania is development. So for us, it's very simple. We can build what we think the market wants rather than buying something and hoping that the market moves in our direction. That isn't true in any way. Whereas in Bulgaria, we've bought what we think is the best asset in the country and investing in it to improve it. So it's more of a Daniel Harris's approach to investment that we've adopted that because the market is less mature. So I think you change your strategies to suit the market. But you are anticipating that, you know, investors will show up at the end of the day.
Yes.
And as we all do.
It is simply what kind of risks and what kind of returns you're expecting. I mean, you have different kind of investors here, and if you're expecting 20% IRR plus here, you will probably not find it in a core property in Warsaw. So you have to go to Romania, Bulgaria, or to other countries. Yeah. If you're expecting an IRR which is 10-12%, probably you'll find it in some other countries. I think that's all. And I think that's a good thing that in the meantime, you know, we have this kind of more risk appetite investors, and on the other hand side, we have the core funds, because just having the core funds would mean they buy the properties, keep it for 10, 15 years, the market becomes illiquid. And so we have some other investors, you know, going into the value add sector, yeah, either developing things or refurbishing or repositioning the buildings and bringing more and more properties, probably in the core sector than to the market, which is, I think, absolutely good.
But I think you draw the absolutely correct conclusion. But in all of that there is a mismatch between the type of investor that is acquiring a core asset in Budapest or Bucharest. In a normalized market, you would expect a core buyer to be acquiring these types of assets, whereas in today's market, you have value-add and more opportunistic buyers buying core assets. So because of the return profile and this temporary, I believe, dislocation in pricing.
Yeah, I mean, the core property in Hungary or Romania today, certainly, or on the pricing level as a value-add or core plus property like in Poland. So
yeah, because, I mean, risk, I mean, in the last few years, what the financial crisis has done is it changed people's perception of risk to the point where they just don't want any. So therefore, Central Europe is divided as follows: basically, places where people don't perceive risk, and that places where they do, Yeah, well they do. So people perceive risk in Southeast Europe, probably in the Baltics. Maybe that might be changing now, as if you go further east. And then you have risk based on what sort of thing you're doing with the property. If you're buying a core, fully leased off property, there's not a lot of risk there. Or if you're doing a development, there's more risk. So where the last few years, capital being invested in the market has been of the more core nature. Therefore, it's gone into core type properties, into core markets. As people's attitude to risk changes over the next few years, which it will, because whatever we say, interest rates are going to go up. In 2017, we will not have interest rates where they are. Bond prices are going up. Stock markets are changing. People will take on more risk. Their perception to risk will change, and therefore that will change the countries they invest in. That will change the sorts of properties and sorts of things they do, and that will open up those markets. And some people will be beneficiaries that got in early. Some people, if they just bought the wrong property, will not be beneficiaries at all because they're still holding the wrong assets. So it depends. So if you've invested well and you believe that people's attitude to risk will change, you will do well in those markets. But you have to have that sort of capital to invest today. Otherwise, you won't be investing there.